Hey, what's up, everyone? Welcome back to my world of stocks. In today's video, we'll be responding to a subscriber's question about Intel stock. And full disclosure, I do own a small amount of it myself. But this question comes from Tim in our community Discord under the Is It a Buy tab, where he posted, Ale, what do you think about Intel's new CEO? Are you buying shares? Thank you. Love the videos. Well, you're very welcome, Tim, and thank you for the nice comment. It means a lot to me. And I'd be happy to share my quick thoughts on the new CEO and the current situation that Intel is in right now as both a company and a stock. So I hope you enjoy this video. A little bit of a spoiler, I do like the new CEO, but I'll explain why in this video. So let's just go ahead and dive straight into it. Now, first of all, as a business, Intel is kind of a special chips company. I say special because they not only design their chips, but they also build them too in what we call chip foundries. And not just that, but another huge differentiator for Intel is that most of Intel's chip manufacturing is actually done in America. I think it's around like 75% of it, which is very large. Whereas most other chip companies build theirs in other places, usually in Asia, particularly in Taiwan through TSMC, Taiwan Semiconductor. And that's also the case for AMD and NVIDIA, who are, of course, Intel's biggest competitors. And that alone just for me makes Intel, a very interesting company and a stock. And the reason is because they're super important for America and really the entire West to be able to compete on the global stage when it comes to chips, which is also very critical for defense reasons, on top of economic and innovation and technological advancements too. But that right there, again, is why I bought some of the stock myself. Well, really, it was a combination of that and the fact that the stock had really been destroyed in recent years. So I went ahead and bought in on the dip after it had crashed by a lot. Now, speaking of which, here's a 10-year chart to give you a better idea of just how much the stock has sunk. And we can see that not only is it negative over the past decade, but it's also lost well over half of its entire value from the top. Now, for reference, during this same 10-year period, AMD has actually skyrocketed by over 4,000%, while NVIDIA has soared by even more at over 23,000% gains. And that's even after a recent dip in both stocks too. So yeah, that right there, I just felt like there may be some deep value and turnaround potential here for Intel. In fact, back then, Intel wasn't just bigger than both NVIDIA and AMD combined, but they were 13 times larger by market cap, which is insane to think about. But they were really the dominant big dog there. You fast forward to today, though, and it's the complete opposite, with AMD being much larger, while NVIDIA is also sitting at almost a $3 trillion market cap. Now, obviously, there's good reason for that, as Intel's market share has been continuously eaten away at by the likes of AMD and NVIDIA, who are either killing them on innovation and AI, which is the case for NVIDIA, or on price with still comparable performance, which is the case for AMD. But the reason why I took the stock regardless is because I just feel that being able to pick up what is still, guys, Intel is still the #1 market share leader in CPUs, both in computers and in data centers. A lot of people kind of ignore that fact, but they are still #1 there. And to be able to get them for this low of a price, I just do think it is mostly worth the gamble here, since again, Intel is the only one of the big three that actually builds their chips here in America. And I think that's just something that is too valuable, really, for the West to ever let them kind of go under. Case in point, we've seen giant subsidies and tax incentives to the tune of billions of dollars being granted by the US for Intel to expand those foundries even further, which, even though our new president Trump has been critical of these incentives and has even signed a new deal with Taiwan Semiconductor to build new plants here in the States and expand here, something that, even though it would likely take many years to complete and really scale up to giant numbers to really affect Intel, it still remains a big long-term concern for any investor in Intel stock. However, in the short to medium term, Intel still has a great opportunity here to be the premier chips maker of the West. And, speaking of Trump, tariffs might actually make Intel even more important sooner than expected as companies scramble to bring manufacturing back home and would likely need a giant supply of chips for all their products too if everything coming from overseas is going to be carrying, giant taxes on them. To be clear though, tariffs would still be a double-edged sword for Intel, which is the case for almost anything we talk about Intel. Yeah, there's reasons to be optimistic. Yeah, there's value there. There's turnaround potential, but you always find a reason to also avoid the stock because there are so many things that also just can hurt Intel very easily, and the field is so competitive. But when we talk about tariffs, the reason I say it's like a double-edged sword is because, yeah, on one hand, you might get a surge in demand locally, but on the other, you have to consider that a giant percentage of Intel's customers are actually overseas. It's a little hard to find exact figures on this, but for example, a report from CNBC cited that China alone accounted for more than a quarter of Intel's entire revenue in 2023. So that's a giant chunk. Now, still, investors seem to be excited about a number of new prospects for the company, including a new CEO, which even caused the stock to rally by 15% on the day that it was announced. Now, this guy, he was previously the CEO of Cadence Design Systems, a company that makes software used by all the major chip designers, including Intel. And he's just seen by investors as kind of like the last opportunity that they really have here to turn things around because if you look at all previous CEOs, they really failed in taking advantage of the rising AI boom where they really lost a lot of ground to Nvidia and AMD. In fact, there's been 4 different CEOs at Intel just in the past 7 years alone. Now, there was one that resigned in 2018 because of a relationship that he had with an employee. There was another one that resigned a couple years after that, after numerous chip delays and losing ground rivals. And then the most recent had sort of ushered in the new era of Intel's foundry business, trying to build chips for other companies. But he later too resigned after that business has really been more of like a giant money drain because of all the CapEx that is required for such massive chip production, including, of course, the new $20 billion factory in Ohio. But that's where we are now with the new CEO basically coming in now and saying he's going to stop the bleeding. He's going to cut costs wherever there's within the company. He's going to build up the foundry business stronger, leaner, make it actually profitable over time. And all the meanwhile, he's going to be going all in on the innovative parts of their business, like with their new AI chips and their new, more recently, the new 18A process, all of which has seen success, all of which has seen promise. Now, for example, they have these new AI accelerator chips. It's a new type of chip. It's specifically designed for AI workloads. And those are already showing a lot of promise on not just performance, but also on price when compared to something like NVIDIA, which is exactly what Intel needs to do here. They need to offer comparable performance. They don't need to be the best. They don't need to beat NVIDIA at everything that NVIDIA does. You're just not going to be able to. NVIDIA is so far ahead. They're so profitable. They're so large. It's going to be hard to catch up to them on performance. But if you can at least compete there, if you can at least offer comparable performance, but at a better price, then yeah, you may actually be able to start capturing some market share, and especially because there's just so much demand in AI chips, and there tends to be shortages and there tends to be supply constraints. So if you can offer a product there, it's not that hard to actually start stealing at least a little bit of market share. Now, having said that, these new chips, there's the Gaudi 3, for example. According to Forbes last year, it showed a major improvement in performance over NVIDIA's H100, but for a fraction of the cost. Now, obviously, NVIDIA is making newer chips than that, but so is Intel. And it's really just one example there, from a year ago that was being reported on. But more recently, you've got other things going on. You've got their new 18A process finally ready for release this year. It's taken years of, a lot of money in development, but it's finally releasing this year. And that could actually help Intel's foundry compete more with TSMC's offerings, as it'll feature a new type of transistor with backside power delivery that is already showing some promise. People are kind of excited about it. Doesn't mean that it's going to beat Taiwan Semiconductor, but it's just another way that they can at least compete more. And again, if you are the main supplier here of the West, it shouldn't be too hard to actually start gaining some market share in these areas. Anyway, all of this is leading now to analysts raising projections for the coming years, basically forecasting a return to growth after years of decline. And the result of that really should be an improving valuation that goes from a very high current PE ratio, even forward PE ratio is still sky high, it's above 50. But that sinks actually when you look at a more future looking PEG ratio, price to earnings to growth ratio, that takes in future years of growth into account. Well, that sits at only 0.5 according to Yahoo Finance. And for context, a PEG of around 1 or less, we generally consider that to be a great value. So it'd be half of, to be a 0.5, that is very low. Of course, they have to deliver. Of course, they have to execute. You have to actually bring in those profits, those earnings. You got to turn the foundry business around. You got to be able to compete. You got to meet, deadlines. You can't be having delays in your chips and all that kind of stuff. But assuming things go well, you could be talking about actually a pretty cheap valuation there. And so that's kind of the play here. Whether this beaten down legacy leader, this former, kind of leader can actually turn things around and maybe not return necessarily to its peak, kind of former glory, but at least be competitive again to the point where you get enough value back in the stock for the price that it currently trades. And yeah, a lot of that will rest on the shoulders of this new CEO, who was quoted in a recent statement saying, in areas where we have momentum, we need to double down and extend our advantage. In areas where we are behind on the competition, we need to take calculated risks to disrupt and leapfrog. And in areas where our progress has been slower than expected, we need to find ways to pick up the pace. And new reports like this one from Reuters say that Tan, the new CEO, is already putting in new plans for their foundry. He's focusing on AI chip production. He's trying to improve efficiencies and revive their manufacturing prowess. And he's even restructuring management, which will likely involve firing people that haven't been delivering, haven't been getting the job done for Intel. He's going to be making changes to management in order to, bring some excitement back into the company and get things going again. Now, he also talked a little bit about this. He said in a letter, this was to employees, he wrote in a letter, says, quote, "Together, we will work hard to restore Intel's position as a world-class products company, establish ourselves as a world-class foundry, and delight our customers like never before." Again, time will tell if they're going to be successful in all of this. But as for me, I have been buying a little more of the stock. And to be clear, I do have way more of NVIDIA. NVIDIA is one of my biggest stocks. Intel is one of my smallest, very tiny position relative to the rest of my portfolio. And I even have much bigger positions in other stocks that are AI adjacent or chip adjacent in other ways. They have exposure to chips too and stuff. So it's not something that, I need. I don't need to own Intel stock, but I do just kind of like having a little bit here because I see the potential value in them as still a leader in CPUs and APUs with turnaround potential in AI and even in foundry too as a critical piece to Western chip development and manufacturing. But hey, that's just my opinion. I'd love to hear from you guys what you all have to say down below. We'll see how this turns out. Again, it's a risky play. It's a turnaround kind of play, but it's one that I kind of like. So yeah, I did buy a little more and we'll see how it goes. But yeah, I'd love to hear your perspective on this. I know everybody's kind of mixed on Intel. Some really like the prospects of it. Some think that it's just, a falling knife that is not even worth looking at, but we'll see. I'd love to hear from you. Let me know down below. Thanks again for stopping by, my friends. I hope you're all doing well, and I will catch you in the next video. All right, take care, everybody. Bye-bye.